joined by Sandip Agarwal, Fund Manager at Sowilo Investment Managers, joining in with us. Sandeep, thank you for joining in with us, and a very good afternoon to you as well. Sandeep, I'm going to start by talking about the up move that we've seen coming in the IT stocks, especially in the last 1 month. Anything that you think is fundamentally improving? What has actually changed here for the IT sector in the last 1 month? Because there's not much of a change right there. So what is it that is triggering this up move also now?
Yeah, hi, thanks and good afternoon, and thanks for having me on the show. So, yes, as you rightly mentioned, and if you talk to any of the management also, or you hear their commentary, you will not find any reason for being so optimistic. But markets are always forward moving and they discount things much earlier than they turn out to be. For instance, last year in January, when if you speak to any management, they were gung ho on the demand environment, but their attrition was going through the roof, and which resulted in sharp cut in margins, and then followed by recession fears, which crystallized into lower demand. Similarly, right now, the demand has not yet picked up. The order books are okayish, but what management is not able to probably comment on is the sharp fall which has happened in the attrition, which should lead to sharp uptick in margins. So I think that management talk more realistically while markets are more forward looking. In my view, you will see a sharp recovery in margins from current quarter because of the sharp fall in attrition which we witnessed last quarter onwards, and attrition is still going down. And then followed by, when you get into first half of FY25, we will see green shoots of demand coming back. So I think if you see from the overall perspective, I would put it like this, that I am not expecting a sharp revenue uptick or good growth in revenues going forward for next 2 quarters at least, but I do see a sharp uptick in margins because of sharp fall in attrition, and that gives us a comfort on the downside on the sector. So I will say that the downside in the sector is limited. Having said so, I would still say that you should chase value at current point of time rather than growth.
Absolutely, chase value rather than growth. And yes, margins is what you're saying, that is something will give us a positive surprise this quarter, and maybe FY25 onwards is where we expect to see better growth coming in. But Sandeep, one more point is that in the recent time, obviously we know that Infosys losing that 1.5 billion contract from those global customers. So when you look at it, such a IT major company seeing such issues, then does that give any impact on the read-through for the sector, or an impact on overall other companies as well, or do you take it as an individual case, a company specific case that is just working out there?
So we heard Accenture CEO on the result call also, and we also keep continuous track of what all managements are saying. They do participate in several conferences. We do listen to what they're saying. I have not witnessed any case of deal cancellation or anything which is sector, which looks like a sectoral trend. This particular deal may be Infosys specific, and there could be some change of scope or some issues at the client end mostly, which has resulted into this. So I would not read too much into it for the sector, and even for Infosys perspective, why the size of the deal looks very big, but you have to put that in perspective that it was a 10-year deal. So any which ways, no one would be building 100 million to 150 million or more than that for a year, which means that the impact even on FY25 or 26 will be minuscule. It does impact sentimentally, but I don't think there is anything to read too much into this cancellation.
Well, Sandeep, this is Lisa joining in. So you highlighted that you should not read too much into what happened with Infosys about the setback on their deal getting cancelled. But what about VIPRO? Because strong buying interest has been seen in VIPRO in recent times. So what's your view on it, especially the legal case against the CFO, the ex-CFO? So how are you reading VIPRO going forward?
So see, I will put it this way, that as I mentioned that, this will be year of chasing value rather than growth in this sector. And I think VIPRO was most reasonably priced at 410.20, and I think market has brought it to some level playing field in that sense. If you see, for example, HCL Tech, which was a strong value pick a year back at 1,000 rupees, today is 1,400. I think it is one of the best performing large cap IT name, and also, in fact, it has outperformed many Nifty stocks in last 1 year. So similarly, I think Wipro at 420 was a little mispriced in terms of valuation. It was relatively undervalued, although growth is also not very encouraging for them. They have tried to do many things, but still it has not reflected in result. But still at 420, 430, there is very limited downside, and I think because of that, with the move in the sector, it was also bought in by the investors from a long-term perspective. I don't read more than this into that right now because we have limited data to comment, but I would say that it may continue to underperform in terms of growth, but given the multiples at which it was trading, it has run up, and it could be justified in that sense.
Right. Sandeep, just obviously, you were talking about how the downside may be a bit protected in terms of for the IT sector as well. But in terms of returns, what is it that you're expecting in terms of returns from the IT sector? What is the realistic target that one should keep? And also anything specific that you would look at specifically in the mid and small cap IT names that is, are they looking more attractive?
So I would say that 10 to 15% return for next 1 year in tech sector is in the tech index and sector is very much possible because, as I said, that margin has a huge scope to go up. All the margins have been burnt at gross level only because of COG has been higher, and that was primarily because of insane level of attrition which the industry has not witnessed in last 1 decade. That kind of attrition we have seen post-COVID, and that attrition is now coming back to pre-COVID number. And when that happens, a lot of margin which has been burnt at the gross level will be coming back to the organization. Because of that, the stocks will start looking cheaper. There could be some upgrades, and in that way, I think that 10 to 15% uptick in the whole sector is very much possible. I think being, as I said, that value is what you should chase. In mid cap and small cap, there are very limited number, maybe only 1 or 2 which could be called out as still there is some value. Otherwise, everything has gone up substantially, and they can go up further substantially because when attrition falls sharply, the margins will recover further, and that may lead to further EPS upgrades, and or the earnings growth could look even phenomenal from here, and that could lead to further 10-15% upside from here. But I think they are not at in any sense undervalued or even rightly valued. They are little above rightly valued. So I would refrain from calling out any name. But in the large cap, I think still HCL, TechM, Wipro, there is some value which could be seen there.
HCL Tech, Wipro, there is where the value lies. So that's the word coming in. But we almost we are at the end of Q3, and it's just 10 days away from the result season for IT, which announces their results first. So what is the early indication that you're seeing? How is Q3 panned out for IT results? What is your view on the overall outlook?
So see, always December quarter is a furlough quarter from the manufacturing perspective. So growth is not very exciting every year. We have seen that trend for last decade. So I would not expect very high growth this quarter also. Maybe between -2 to +2% kind of range you can expect for the sector. But as I said, because of fall in attrition, you will see some positive surprise coming in on margins. But remember that when these companies come out of with numbers, by that time the client budgets will be freezed, and they will get some perspective on that. And if client budgets are positive, the deal flow will be positive and market will take it positively. So I don't think that anyone is expecting a big surprise on the revenue front in this quarter. Even margin surprise will be a positive surprise. What people are looking at is deal announcements and commentary on budget, which I think will be positive.
Okay, Sandeep, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the IT sector and as well as what we should be expecting from Q3 as well. That was Sandip Agarwal joining in with us this afternoon to talk about the IT sector.